Hello and good morning. I welcome you to the morning meeting today on Monday, the 9th of April 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as the Global Head of Research and Education. We want to have a look at the markets and how things are going after Friday's non-farm payrolls, which came in below expectation here with only 103,000. In fact, there was some pressure forming then in the last minutes of trading into the last trading or into the weekly close here, and but nevertheless the DAX can or found some good bits, let's say, here into the start of the new trading week, mainly due to the fact that there was potentially a shift here at Deutsche Bank, the biggest German bank here. Their CEO changed. That was something which couldn't be expected on Friday. There was John Krein, still the new CEO, and now it's his name is Zewing. So he's German and Christian Zewing, and the change here resulted in some serious gains in Deutsche Bank shares. Let me just show you the share here so I can see it. It was a huge, I mean, it's okay. it's not that we are flying, and in fact the overall picture for Deutsche hasn't changed, but the gains here. So when you look at the close, which was around at 11.34, if I see this right. Let me just see. Yeah, 31.6. So 11.32, and now we're opening here today at 11.84 and can stabilize around this opening here. That's potentially one of the main drivers for the bullish performance in the DAX. Nevertheless, and this is the thing, so Deutsche stays short, I think, as long as we trade below 1360, 1370 here. So in fact, if we gain some further momentum, probably that will drive the DAX even higher a little more, and we're about to probably see a test of the region around 12,500 points. But the thing is that here against 1230, we find a potential short trigger, former lows, against which we could probably trigger short again and then see some further losses. And that said, I think even though from an intraday perspective it's quite obvious that the DAX is clearly bullish and that short engagements should be considered with a very conservative approach here, but the thing is that that nevertheless there is still some serious doubts, I think, below 12,500 points, if the DAX can really recover the losses seen at the beginning of February, and where there hasn't been any attempt so far to break this structure of falling highs and falling lows here. So 12,500 is, I think, the key level. If we make it above that, even that doesn't necessarily change the overall picture. Probably the overall picture starts to brighten up, let's say, a little. But the problem is that even then, if we see some further gains, so short-term bullishness, we find quite strong resistance, I think, against 12,800 to 12,850 points. And so with this in mind, I think this should be definitely considered with careful. No, you should be careful. You should be careful when taking long engagements here from a longer than intraday perspective here in the DAX, I think. And so it's not just only the Deutsche and the question whether a change here of the CEO will lighten things up for the biggest German bank, but it's also the case that, for example, there's still the fears around a potential trade war between the US and China here. And so with this in mind, I think it's all the time there's potential that bigger offers could hit the market here and drive the DAX aggressively lower, even though, again, This is the longer time frame. From an intraday perspective, the DAX is minimum long as we trade above the exponential moving average 50, respectively. I think here above 12,320 to 12,330 points. I mean, sure, we have to wait for the US markets to open then, and what they deliver. Thing is that here the overall picture, especially after the losses on Friday, after the non-farm payrolls couldn't really surprised on the upside here, even though ISM employment last Monday came in slightly below expectation, nevertheless was still fine. The same is true for the ADP data set, which came in significantly above expectation. So that we only saw 103,000 here from the non-farm payrolls, for the non-farm payrolls, is definitely also something to potentially worry about. And I'd like to add here the trade war fears, which are currently building, because with this in mind, the overall outlook for the US economy does not look that bright. And this could then again also drive equity prices significantly lower, even though everything above the 200 simple moving average here, this blue line, is at least short-term bullish. So we are in a current neutral market environment, but with the slight bullish touch. Nevertheless, if we drop below the simple moving average 200 here, and drop below 23,600 points, which by the way coincides with again losses of something like 600 to 700 points, would be something bigger, let's say, then things would definitely turn sour. And then it's also the case that here in the DAX we should be really careful, and could see the DAX giving back most of those intraday gains. Nevertheless, again, so right now the long side in the DAX should be definitely favored, and you should be really careful to trade short the DAX from the short side. Intraday, as long as we trade above the simple exponential moving average 50, we should be clearly pro-cyclical long. Yeah, and the good thing is we have the equity markets right now, because if you look at the currency markets, you can see that nothing big is developing here. So the non-farm payrolls, disappointed, came in below expectation. Nevertheless, you can see Euro USD is neutral. Euro USD is not showing any kind of clear signs on the up or on the downside. All the gains here from last Monday onwards, respectively on Thursday, were given back due to the weak non-farm payrolls. And currently we are stabilizing slightly below 123. The same is somehow true for dollar Japanese yen, who has attacked the region of 107.50 to 108 on the upside. Nevertheless, hasn't really gained further momentum here, and now has found some stronger resistance, mainly due to the non-farm payrolls, which came in below expectation. Nevertheless, the thing is that so far is at least a further chance that we get to see another attack at this level, because the offers coming in here against this level were now that aggressive, and this is mainly due to the fact, I think, that non-farm payrolls disappointed, yes, but, and this is the thing, non-farm, I'm sorry, I just lost the connection. One second. Non-farm payrolls. Yeah, but the monetary policy path from the Fed is still given, and it doesn't really matter if numbers come in above or below expectation here, but it won't change the overall picture, which was already drawn by the Fed at all. And due to this, I think there's still the picture hasn't dramatically changed here, and there's a good chance that probably there will be another attack on the upside. Well, let's say there is still a chance as long as there's no risk aversion hitting the markets, because risk aversion usually results in Japanese yen strength based on the fact that you get to see capital, let's call them backflows, into the Japanese currency, which is usually used as a funding currency for carry trades here. And so with this in mind, I think yeah, with this in mind, there's then the chance, if really risk aversion hits again, and if the current strength in the European markets is not sustainable, that then there's a good chance that we see some further pushes here on the downside, which could probably then let us trade back towards 105. Nevertheless, so far, still a chance that we'll get to see the attack on the upside. The same, by the way, is also true for gold, which has, surely has seen some strength here on the not so good non-farm payrolls last Friday. Nevertheless, it's giving back most of these gains. Same reason as in dollar Japanese yen currently, because there's no real risk aversion forming right now. Currently, gold is giving back some of these gains, as is dollar Japanese yen. And probably, and this is the thing, probably there will be further downside action. Nevertheless, the picture overall does not change for gold, I think, because what we can clearly see and then clearly expect is, in fact, rather sooner than later, an attack at the region around 360 to 365 on the upside. And here there's some I think there's some serious chance that there will be such an attack on the upside, which in gold, which goes hand in hand, in my opinion, with a push on the downside in dollar Japanese yen. Even though, and that's something also worth mentioning, short term, there is a good chance that dollar yen will perform on the upside, but it goes hand in hand with bearish action then in gold. And finally, very interesting picture in crude oil. There's also some pressure which formed here into the weekly close last week, and we are now trading back towards this trend line. And the interesting thing about this is that currently we are I think we are about to see a further push on the downside. So somehow, even though some might say, well, but we're still bullish. Yes, I completely agree. Nevertheless, I really doubt that we can now find good support against this level and stronger demand here, which pushes us back towards 66.50. I mean, that's definitely still a chance, but nevertheless, I somehow have the feeling that, especially around the trade wars fears, which are still in the markets, that here, based on that, WTI has a serious chance to see a pullback down towards 60 and breaking this trend line, instead of now seeing stronger demand pushing us towards the yearly highs. That does not necessarily mean that the overall bullish structure is broken. This is not the case as long as we trade above 58. Nevertheless, it's still something which, or at least I see the chances of a test of this region. But this is a pure gut feeling right now, because usually you would now say, well, I go long against this trend line, since it's obviously quite a significant one. It's not only just 2 times we tested this trend line, but it's several times we tested this trend line here. And so currently, I think there's no real reason to doubt that there will be another push towards the yearly highs, but I have those doubts, and that's one of the reasons why I don't want to go long against this level, but see chances higher somehow that we push down towards 60 and probably even below that, even though everything above 58 should be considered long in WTI crude oil. And that's it from my end. I hope you enjoyed the morning meeting here, and I look forward to tomorrow, 9:30 a.m. GMT. The next morning meeting will take place then. I wish you all the best. Happy trading, watch your stops, and talk to you tomorrow. I look forward to it. See you, and bye-bye.